Good morning. It's Thursday, August 3rd, about 6 a.m. Central Time. Looking at the precious metals overnight, they're still continuing to weaken. We've got gold down $6, traded at $19.70. Silver's down 26 cents at $23.61. Copper's unchanged at $3.84, and the platinum market's down 6 at $9.24. Had a lot of people calling in yesterday asking about the credit downgrade, what the ramifications are on the stock market, what the ramifications are on the precious metals, and why did gold go unchanged and even negative on the day. So a lot of questions out there we got to address here quickly. So it's easy to make some comparisons to the downgrade from 2011 to now, but there are structurally a lot of differences. Right now, the economy is continuing to expand. It's showing signs of strength and resiliency. We've got inflation pressures that are moderating and they're starting to come to more normalized levels. GDP is stronger than expected at 2.4%, and the unemployment rate remains low and the labor market remains firm. So if you rewind back to 2011, we were coming out of the 2008, 2009 financial crisis. We had credit spreads were really wide. We were monitoring what's going on in all these different countries here. It was Portugal, Italy, Greece, and Spain. You were looking at those credit spreads and seeing if they were going to blow out any more. So unemployment was north of 8%, and GDP was well trending below where normalized levels were. So we're in a different state of the economy right now, and we're really focused on things like the labor market, where we saw ADP come out, was better than expected again, and that's what really pulled the rug out. It pushed the dollar back up, it pushed treasury yields back up. So today we're going to have the unemployment claims come out. They're expecting 226,000. Last month we saw 221. We need this number to come in higher if you're going to see gold futures recover. So we are kind of bumping lower. Same thing with the silver market, same thing with the platinum market. Remember, platinum sells off generally from August 5th to about October 1st. Somewhere around there it finds its low, and it tends to rally into the rest of the year and into the next year. We've seen that work out five out of the last 30 years, 5, 15, and 30 years straight. It's worked out about 80% of the time. If you look at the gold market, I put this in the bottom of the email. So if you get the email version of this, you'll see it. And it discusses the seasonal analysis on the gold market, as well as I put the chart in there. So gold futures tend to rally from August 11th on up to August 26th. It's worked out 12 out of the last 15 years. So the whole breakdown's right there, and then the chart that goes with it. So if you got any questions, we're still kind of building some positions for that seasonal trade. And then on the equity markets, if you do have Russell shorts, we're going to look to kind of work our way out of those. We're keeping an eye on the crude oil market. I think it's still a little too lofty around this $80. I think if you're going to do anything with the crude oil, you do some options. They do have micro and mini options now. And then the grain market's a little bit firmer, but nothing too explosive, so no real action there. We'll continue to target the copper market. I think that's the best. I think on the silver market, you wait for a little bit leg lower. We start getting around like 23.58 and below. I think that the downside is limited from there. You build your longer term positions going out. You got any questions, give me a call. Be sure to check out Bill Baruch halftime show on CNBC. He flew out to New York. He'll be joining those guys on the panel conference with Wapner, Josh Brown, those guys. But if you got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.